everyone. Welcome to the Dezan Associates webinar on Crash Course Doing Business and Investing in China's Greater Bay Area in 2021. Thank you for joining us. My name is Shanshan, and I will be today's moderator. Before we begin, I will give you a quick introduction of Dezan and Associates. We are a Pan-Asia multidisciplinary professional services firm. We provide market entry, legal, accounting, tax, HR, technology, and operational advisory to international investors for operations throughout China, ASEAN, and India. And our mission is to guide investors through Asia's complex regulatory environment. So welcome to today's webinar. Following the 14th Five-Year Plan of China's central government, plans for South China's Greater Bay Area, also known as the GBA, have a similar theme that involves a deeper integration of the major GBA cities, as well as strong ambitions to build a world-class innovation hub and city cluster. Shenzhen is especially expected to be acting as the core engine with multiple preferential policies. In this webinar, our experts will provide insights and guidance to help investors access the booming GBA ecosystem, as well as explore and develop new opportunities. This is a two-session webinar, and we are going through the first part today. The second session will be held at the end of this month on March 31st, and you will receive a new registration link to the second session in another mail in a few days. Today, together with our experts, our International Business Advisory Manager, Mr. Guillaume Campos, our Senior Manager of Corporate Accounting Services, Mrs. Amber Liu, and our Business Advisory Services Associate, Ms. Abby Chen, who will deep dive into the market entry policies of this region and explain how businesses can get started. And at the end of this presentation, if we have time, we will be taking a few questions from the audience to answer. So throughout the webinar, if you have any question, please leave your question in the question panel. And if we could not answer it today, we will try to address them in a follow-up email later on. And we will be sending out the recording of this webinar as well. Okay, I will now hand it off to Guillaume to begin today's webinar. Hi, Guillaume.
Hi, Shanshan. Thank you. Good afternoon, everybody, and welcome to this webinar. As Shanshan said, this is Crash Course in Doing Business and Investing in China's Greater Bay Area, Part 1. Please allow me just briefly to introduce myself and my colleagues. Just a moment. I am, like Shanshan said, I am Guillaume Campos, Manager for International Business Advisory, and I'm based in Hong Kong. And joining me in this webinar are my colleagues Abby, Chen, and Amber. We'll be speaking later on our second section. They are both based in Shenzhen. First of all, we should start with a brief overview of what we will talk about today, given the ground that we have to cover about the GBA, which has a lot of information, as you probably well know. This webinar will be divided in two parts, with the second part being scheduled for March 31st. During this session, however, we will be covering in section 1 the GBA in a general manner, doing an overview of the region, talking about each of the cities that compose it, the main players in the region, big and small, and how the region has evolved as well as why it was created in the first place. In section 2, we will be covering the legal means of entry into each of the 3 jurisdictions that compose the region, which are Hong Kong, Macau, and Mainland China, the 9 cities that compose the GBA, as well as the taxes imposed in each of these regions, and most importantly, how the whole Greater Bay Area interacts as a whole and why it cannot be ignored by foreign investors. During the second part of this webinar on March 31st, we will be covering the subsidies granted by each of the 3 governments in the GBA, and general advantages of investing in it, investment policies for foreign investors, let's go ahead. We should start with some geography. some of you probably already know this, but the Guangdong, Hong Kong, Macau Greater Bay Area comprises basically the two special administrative regions of Hong Kong and Macau, and the 9 municipalities of Guangzhou, Shenzhen, Zhuhai, Foshan, Huizhou, Dongguan, Zhongshan, Jiangmen, and Zhaoxing, all in the Guangdong province in the south of China. Together they have a total area of 56,000 square kilometers. And at the end of 2020, the population of this region was 72 million, and the GDP was almost 2 trillion USD. With the average GDP per capita, was 23,000 US dollars. Basically, China initiated the development of the GBA as part of the country's Belt and Road Initiative in 2015. The Greater Bay Area, after this, entered the official lexicon for the first time, and if you recall, started being a common expression in every newspaper that talked about China and talked about the Belt and Road Initiative. As you already know, most likely the 4 core cities are Guangzhou, Shenzhen, Hong Kong, and Macau, and these are the most well-known for foreign investors and the most popular for foreign investment. However, the other remaining 7 cities also will play a super important role from an investor standpoint, and the growth potential of these cities is, very large. For example, I'm going to talk about some of the less known of the cities. Dongguan, for example, which has a huge manufacturing capabilities. It is said even that 1 in every cell phone produced in the world is producing Dongguan. Some of its major industries are IT, electric, garments, toys, furniture. Likewise, Foshan, which is north of Zhuhai, is also home to 3,000 electrical appliances factories, 3,000, and the major industries are obviously electronic appliance and manufacturing. Huizhou, for example, here as you might see in the map, is well known for petrochemical industries, electronic information, etc. Another one that is one with the lowest GDPs, but also has a huge potential, is Zhaoxing, which is well known for tourism and mining, and as also not as well known as Dongguan and Foshan, but also very strong in electronics. The main cities, of course, Hong Kong is the most well known. It's the financial center of the GBA for now and for the foreseeable future. And Shenzhen, is often called the Silicon Valley of China, very well known for all industries related to high tech and general technological applications. Let's move on. Let's see how it all started. This is basically a picture of Shenzhen 40 years ago in 1980, and now. It all started after the enactment of China's open door policy in 1978 by the country's leader at the time, Deng Xiaoping. The country opened itself to foreign investment, and it became feasible to actually do business in China and incorporate a company in China. Of course, at that point, the restrictions were very high, and there was still a lot of things a foreign investor could not do. Today, things are a little bit different. Just a little bit more on the history of this. One of the first regions that opened itself to foreign investment was Shenzhen. In August 1980, Shenzhen, Zhuhai, and Shantou in the Guangdong province were designated special economic zones, followed by Xiamen, which is in the Fujian province, in October in 1980. Basically, a special economic zone is, the prequel of what is today called and very often debated in the media, the free trade zones of China. The special economic zone was basically the same thing, but it was a more umbrella term in which the the free trade zone is under. Special economic zone, the definition, it's geographically delimited area, it has a single management or administration, and the most important, offers benefits based on physical location within the zone and has a separate customs area. This is basically a sort of experiment that the Chinese government has been doing for years, and that has had huge success in its primary objective, which is to attract foreign investment in China, and use that investment to grow the region itself. Obviously, not all of the investment in Shenzhen, not all of the growth of Shenzhen, is due to foreign investment, but a great part of it is. It's allowed to the local industry to grow as well. The reason why these four SEZs were chosen was because they were located in coastal areas of Guangdong and Fujian, which already had a very long history with contact with the outside world. Hong Kong, which was at the time administered by the British, Macau, administered by the Portuguese. And in fact, I chose Shenzhen because the choice of Shenzhen was specifically strategic because of its location bordering Hong Kong, the principal area from which China could learn capitalist modes of economic growth and modern management technologies. More on the history of all of this happened. Back in 1980, because China had just reopened to foreign trade, these SEZs had an almost immediate impact on the China's FDI investment, foreign direct investment. At the time in 1980, at 1981, 59.8% of the total FDI in China was in Guangdong, with Shenzhen having 50.6%. Moving on to the next slide. Okay, this is the same picture, but concerning Guangzhou. Guangzhou was not itself an SEZ, but because of its also close proximity to Shenzhen and other areas which were deemed SEZ, it benefited a lot from economic growth, and overall the SEZ experiment is considered a huge success from the Chinese government. In fact, there's a very good document published by the World Bank in which they analyze, China pre-SEZs and China post-SEZs, and obviously the grade is A+. Sorry, just one moment. In more recent times also, Guangzhou benefited from the establishment of the Guangdong Pilot Free Trade Zone, which was formally approved by the State Council and established in the end of 2014. Guangzhou was already a region growing a lot, but the free trade zone in the Nansha new area benefited the region a lot, and in typical fashion to the GBA, it prioritized strategic emerging industries related to technology, shipping, logistics, advanced manufacturing, which is a manufacturing, revolving around highly advanced technological procedures, financial services. Of course, Hong Kong has the monopoly on this, but Shenzhen and Guangzhou are slowly gaining an important slice of this market. Tourism, naturally, and healthcare. Healthcare and health and medical equipment is a huge priority for this region. Overall, this FTZ represents a huge government play to attract investment, the Guangdong province and part of the GBA area. Some of the policies, for example, of the Nansha area in Guangzhou, which you can also check online in the Free Trade Zone website. It's a very good website to have an idea of the advantages of investing there. It's basically, financial innovation with a lot of banking services to facilitate foreign investment. ease in custom clearance, convenience for trading companies that import a lot to China and do cross-border e-commerce, etc. And many policies for talent attraction from foreign countries and from the neighboring regions of Macau and Hong Kong. In fact, 2 weeks ago they even announced the creation of a artificial intelligence zone in Guangzhou, which will also grant a lot of tax advantages and policies to people that invest in this area and in this particular region. Shenzhen already have some of them, and other regions in China like Beijing and Tianjin also have it, but now the GBA also has it. Just to also, okay, I think we can move on to the next slide. Okay, these are basically the big players in the Greater Bay Area. In this slide, you basically are seeing a list of all the Fortune 500 companies in the region, as well as other companies that have almost attained that level. One big piece of news that you should all know is that as of 2021, the Fortune 500 is more now Chinese than American. Of the global 500 companies, 133 are Chinese, and many of these new additions come from the GBA area. From the American side, it's only 121. As you probably know, the Fortune 500 list is a list of companies published annually by the Fortune magazine, which is an American publication. And they simply rank 500 of the largest corporations in the world by total revenue. The list includes publicly held companies along with privately held companies for which revenues are publicly available. In China, differently from America, there's a lot of public investment in a lot of companies, and a lot of companies that initially started as small grew thanks to a lot of help from the government. If you look at this slide again and you see under each region the type of companies there are, you can understand what the region is all about. For example, Hong Kong is the financial center. When we think about Hong Kong, it's a region where the service sector dominates the economy, since there are no major spaces for agriculture or industry. In Hong Kong, 93% of the economy is around services, and a huge part of those 93% is related to financial services. Import and export is also big, consisting of 18%. But if you look at the companies, it's AIA, insurance, China Taiping, also insurance, and etc. In the case of Macau, for example, if you look at it, it's also a mostly services-directed economy, but of a different type. F&B and gambling and hospitality are the leading services. If you look at the slide, the leading companies are gambling companies, which are, from left to right, Sands, Wynn, MGM, which are all casinos, and Macau Legends, the last on the right, which is a holding company that owns some casinos in Macau. So at the end, it's a casino managing company and owns the Fisherman's Wharf of Macau, which is a dining area of Macau where people, go for night entertainment. Macau is definitely an interesting place for investment, but very niche, very core, very related to, again, F&B, hospitality, gambling. And these days, gambling is something that, if you're thinking of going into it, is something that is not granted easily by the local government. So maybe stick to F&B and professional services and hospitality. As for the mainland, Shenzhen, Guangzhou, Foshan, we see that the scope is much more diversified, with some financial and security companies, naturally, like Ping An and China Merchants Group, but also high-tech industry companies like Tencent, WeChat's owner, G, which is a very popular drone company from Shenzhen, also known for other technological advances, Huawei, which has been in the news and is very good cell phone manufacturer and also other technological applications manufacturer, and BYD, which is a automotive brand that completely dominates Shenzhen. If you had the opportunity of going to Shenzhen, 95% of the public vehicles are electrical, and most of them are BYD, which is an electrical car company. Also, if you look at the foreign, where it says foreign part of the slide, we see that there are a lot of international Fortune 500 companies with a base in the mainland in Shenzhen, which once again shows that it's a place with policies focused on high tech and focused on attracting, multinational Fortune 500 companies from America, Germany, South Korea, Samsung, etc. On a final note about this slide, I would just like to say that if you look at all the companies, with the exception from Macau, you will notice that all of the companies are, technological, financial, and automotive sector. This is because, this is what the region is trying to shape itself as, a center for innovation, technological advancement, and that is the core of the growth of the GBA, with obviously, some areas stronger on some aspects than others. Let's move on. This slide, maybe not as important as the other one, but just to give you an umbrella, a bird's eye view of the idea of the GDP of the cities in the GBA and how they compare to the whole nation. Now, Shanghai, Beijing are still the richest cities and the main centers of foreign investment in China, and that's all right. They are great cities, no doubt, and huge opportunities there. But Shenzhen has known a very rapid growth, especially in the past years. In 2020, which was a year that the whole world knew recession and sometimes depression, Shenzhen's GDP was 2.8 trillion RMB, which is equivalent to $420 billion. And this was growth in relation to 2019, when the GDP was 2.6 trillion RMB. Also important, just to give you some interesting facts, is that Shenzhen's GDP, which was for many years, much smaller than Hong Kong's, finally surpassed it in 2018. And once again, this is due to the huge investment from the local and central government in building up a diversified economy, which Hong Kong, as said before, doesn't have as much possibility of doing because of its limited territory, etc. Hong Kong is mainly financial focused, and Shenzhen can be that and much more, as well as the other cities in the GBA. Okay, Dongguan, for example, it is a city that is also growing every year and grew during the COVID. Its GDP in 2020 was almost 1 trillion RMB, which is 14 billion USD. When it's compared to 1980, the GDP was 109 million USD. So it's 14 billion to 109 million USD. 40 years did that. It's really unprecedented, and this area is clearly a motor for China's economy. Moving on, this slide, it's just to give you an idea of the localization of wealth within mainland China. This is almost, a rule of thumb. When you know where billionaires and their respective companies are located, it's conclusive that those locations are also sources of wealth, growth, and opportunity. And in the GBA, this is definitely true. Even though the most famous and mediatic billionaire from China is Jack Ma, whose main company, actually Alibaba, is located in the center of China, in Hangzhou, which is about 1 hour by train from Shanghai. The vast majority of billionaires from other well-known companies are located here within the GBA. Now, there are a lot of companies in here that are very well known. Tencent, SF Express, every time you've ordered something, SF Express for sure. Midea, which is a electronic appliances company. But there is, an interesting fact, a company that is used widely by everybody that lives and eats in China is Foshan Haitian Flavoring and Food, which sells basically sauces and additives for food, and as dominates the soy sauce market completely in China. Just to show you that even though technology related companies are the main focus of the GBA, there's also room for many other areas. Another company that I would like to mention is Mindray, which is in this list. It's number 20, which is a global medical instrument developer, manufacturer, and marketer based in Shenzhen. They basically design and produce medical equipment and accessories for both, human and animal use. As I said earlier, this is a huge industry for the Chinese and for foreign investors, and it's also a preferential industry. It's an industry where you get a discounted tax rate. If you invest in mainland China, you get a 15%, as opposed to the normal 25%, as well as many other policies. But I'm overstretching myself. This is something we will talk about on the 31st of March. Okay, let's move on. Okay, so this slide is, I think it's important as a contrast, because in the GBA, there's not only room for big players, there's also room for startups. And a lot of big players start as startups. And in here, there are many success stories in both the Chinese and foreigner sides. As you know, I don't have to tell you the definition of a startup, but it's a startup is a company that's in the initial stages of business, and until the business really gets off the ground, a startup is often financed by its founders, or other outside investors that are attracted to the project. The many funding sources for startups include family and friends, venture capitalists, crowdfunding, and loans. In Shenzhen, all these infrastructure that help a startup succeed are in place, because a startup, like any company, it's customers, products, competition, the right team, etc. But funding, it's where it all starts. And in Shenzhen and in the GBA, there are companies that help startups succeed. Basically incubators, which are companies that help startups by providing them with professional training, working space, and venture capital. And accelerators, which are basically doing the same job, but focused on scaling companies that already are in the market. Incubators are, when the process is still, like a fetus, let's call it. This, is also very common in the West, especially in America and in some places in Europe, where, it's very common for startups to pitch to venture capitalists. In China, this is also common, but the landscape is rather different, because the central and local governments are dominant. In the West, is more private initiative. In here, the governments take a hand, and they have invested in many companies throughout the years. And for example, just to give you a more concrete idea of how many of these accelerators and incubators are present in the market, Guangdong is home to some of the most aggressive of China's supporting incubators and accelerators, with around 1,000 incubators based in the province, and 1/10 of them is as branches all over the nation. There are 807 co-working spaces, which you probably well know if you live on that side, and 200 incubators, co-working spaces. Almost all of these incubators, FYI, almost all of these incubators and accelerators are Chinese, but some foreigner ones are appearing. And even the local governments are launching foreign central institutions like the Guangzhou International Cooperation Center, GICC, just for reference, just to show you that it's possible for both Chinese and foreign startups to succeed. In this slide, on the left side, you may see some, world-renowned companies that started out as startups. Seed, for example, was founded in Shenzhen, and now it has operations in San Francisco and Taiwan. And it's basically a company that offers manufacturing as a service and enables both small businessmen and large companies to produce. OnePlus is, a very well-known cell phone company that, had very innovative marketing techniques. In the beginning, you could only buy the cell phone if you were invited by another user of the cell phone. It was, very niche, very elitist. That's why, in part, people loved it. MakeBlock is also a company which has very similar companies in the West. It's a very innovative company focusing on STEAM education. And STEAM, basically, it's an acronym. It means, any type of learning which is done through science, technology, robotics, etc. They sell all those videos and and robots and all all that their technology to educational institutions like schools and other types of educational institutions. On the western side, there are a few companies. I would like to, for example, mention Lewagen, which is a very interesting concept present in Shenzhen and also in Shanghai, for example, which is a coding academy that attracts a lot of. They basically provide a coding course that lasts 9 weeks, if I'm not mistaken, as well as other tech-related courses. And this is very good because a lot of companies, a lot of startups right now start on the internet, and there's a lot of success stories from people that did the course and started their own company. There are others like Kiev, which is a Finnish producer of peripherals for gaming, etc. And now I think we should talk about the unicorns in the GBA. I'm not talking about the animal. I'm talking about the financial expression. A unicorn is a term used in the venture capital industry to describe a startup that is valued over 1 billion USD. The history of the expression, just for your reference, is when a venture capitalist said that when it comes to software startups, only 0.07% reaches 1 billion. So seeing them is like seeing a unicorn. And the expression stuck, and now it's used to describe companies that achieve this valuation. And some of the most famous unicorns in the West are Google, Uber, Apple, etc. SpaceX also, WeWork also is going through trouble, but it also achieved a very high valuation very early on. And in here, there are unicorns in a lot in most of the GBA cities. Even places like Dongguan, Zhuhai, Foshan, which are smaller, have unicorns. For example, Zhuhai has Tuandai, which is a peer-to-peer lending company, again, financial services, in a city which is not well known for financial services. This peer-to-peer lending is something very common in China, and it's very common for people that cannot get loans the traditional way, which is through a private bank. In Foshan, for example, the unicorn is Icos Solar, which is a company that produces and sells solar panels, batteries, new materials like lithium batteries, etc. You will see on the bottom left corner, the leading unicorns in the GBA are G, which, again, the drone manufacturer, very popular within and out of China. They had huge sales. I think everybody I know has a G drone, except me for now. WeBank, which is a virtual bank. We will be speaking about virtual banks later on. which belongs to Tencent. And another one which I would also like to mention is SenseTime, which is the most valuable artificial intelligence company and was established in Hong Kong and also has expanded internationally very quickly. Basically, some of its technologies produced by SenseTime include facial recognition, image recognition, object detection, etc. Technologies that you now see everywhere in China. You probably have heard of the social credit scheme. A lot of the technologies used to identify people are produced by companies like SenseTime. I think I should get on moving because I was just looking at the clock and okay. Now I would like to hand over the presentation to my colleague Abby, who will be speaking about investing in mainland China now to set up a business there. So Abby, the floor is yours, and I'm going to mute myself. Thank you.
Thanks, Graham. Hi, everyone. My name is Abby Chen. I am an associate of the Business Advisory Service team of Dezan. Our team is mainly in charge to help clients to set up companies in South China, particularly in Guangzhou and Shenzhen. Our service also includes providing advice regarding the law environment for foreign investment and regarding company structuring before you set up a company, and also provide guidance regarding compliance after you have set up your company in China. In my part, first of all, I'll introduce the market restriction to foreign investment. In this slide, you see some hot industries that many foreign investors wish to invest in. However, some items are restricted and some items are totally forbidden for foreign investment. The first hot industry is related to information communication. For example, if you want to set up a company to develop and operate an e-commerce system or other online software or application, this is regarded as a value-added telecommunication business. You also need to have a Chinese partner to form a joint venture. And you, as the foreign shareholder, you can have 50% of shares at the most. Under this information communication industry, you can see some items are totally forbidden for foreign investment. For example, a foreign investor cannot engage in the business of releasing news, doing publication via the internet. The second hot industry is medical institutions. It requires Sino-foreign joint venture, but fortunately, there is no requirement on the share proportion, so the foreign investor can be the controlling party. Education is also a hot industry, but foreign investors can only invest in preschool, senior high school, and higher education, and it requires a Chinese partner to control. And please remember, compulsory education, which means from primary school to junior high school for Chinese citizens, is forbidden for foreign investment. As you may know, not only China, but also other countries have restrictions for foreign investment to a different extent. The reasons for such restrictions are complex, including economic reasons and political reasons, and must align with the local law environment. So before you decide to invest in China, you should look up the restriction list in China. The latest applicable list is called the negative list. Before 2 or 3 years ago, when a foreign investor wants to invest in China, you have to look up a document named Catalog of Industries for Guiding Foreign Investment. We call it catalog for short. In the catalog, there are 3 categories of industries regarding foreign investment. One is encouraged industries, in which the government encourage foreigners to invest. As encouragement, the government has some green channels to accelerate the procedure of company set up, and there may be certain subsidies for these industries. The second and third categories are restricted industries and forbidden industries, similar to those examples you have just learned from the preceding slide. For those not expressly specified in the catalog, which is neither encouraged nor restricted nor forbidden, they are allowed for foreign investment without any restriction. But the company incorporation should go through the normal procedure without any green channel or any subsidy either. This catalog has been updated from time to time, and the latest version was in 2017. Okay, after you understand the market restrictions, in this second part, I'll introduce how to establish your company. Before incorporating your company, you will decide which type of entities you should incorporate. From the company structuring perspective, we can roughly divide the foreign invested entities into 3 types. One is the Sino-Foreign Joint Venture. We call it JV for short. The second is the WFI, and the third is the Representative Office. We call it RO for short. Which one should you choose? You can consider the pros and cons based on your situation. For example, in contrast to the cons of setting up the JV, the pros of setting up the WFI are that you can have full control of the company. The document for incorporation will be more straightforward. However, setting up a WFI, you cannot engage in those activities of the restricted items on the negative list, and you might pay more effort on digging and searching information and resources, because as a foreigner without a Chinese partner, you may have limited information about the Chinese market. As for the third entity, RO is a special existence, which is neither a JV nor a WFI, and it is even not a legal person from the legal definition. And it is such a special existence that the negative list we introduced before and the flowchart of incorporation and the timeline we will mention in the following slides are generally not applicable to an RO. Okay, if an RO sounds like almost nothing, why there is such an option? Of course, there are some reasons. For foreign investors who have limited knowledge about China market, setting up an RO can help them to do some research, market survey, communication, and set up a relationship with Chinese partners to pave the way for future business. Moreover, an RO can rent a very small space and employ a very limited number of employees, so the cost may be very low. And the deregistration procedure of an RO is more flexible than the deregistration procedure of JVs and WFIs. But what is good for you, or what are the barriers to set up an RO? To set up an RO, the foreign company that the RO is representing must have been existing for at least 2 years. By comparison, for most JVs and WFIs, there is no such requirement for their investors. And profit-making activities are totally forbidden for RO. And an RO cannot directly employ staff by itself. It must engage an intermediate dispatching company, such like our Dezan to employ workers to work at the RO. So to sum up, And RO would be an option for foreign investors who are really not sure about the Chinese market, but would like to have some kind of physical existence in China to test the water or do some preparation. As mentioned in the last slide, the flowchart of incorporation and timeline we are going to talk about here generally not applicable to an RO. So let's go back to the introduction of the real companies, that is JV and WOFE. After you decide to set up a JV or WOFE, you should also think about what activities the company will do. According to different business activities, the companies can be roughly divided into 3 types. One is a service company, the second is a trading company, and the third is a manufacturing company. If your company only provides service without selling products and without producing productions, for example, you only provide consulting services to your customers, then it is regarded as service company. If the main activities of your company is to purchase products, sell products, and particularly import and export products, it is typically a trading company. If you want to massively produce production in China, such a company is typically regarded as a manufacturing company. Why we categorize companies into these 3 types? Because the procedure and timeline of setting up the company will be different depending on which type it is. We can see from the next slides. Here is a flowchart regarding the company incorporation procedure. The marks in dark blue color apply to all types of the companies. The marks in sky blue color applies to the manufacturing company, and the marks in gray apply to trading companies. Well, from this flowchart, you will see if you want to set up a manufacturing company or a trading company that do import and export, you must go through more steps, which will cost you more time to have the company set up. Okay, a general glimpse here is fine. We will not go through the procedures step by step. After the meeting, we will send you the link of these slides for your reference. So in this slide, we see the estimation of the timeline of setting up different types of entities. For manufacturing companies, as most of the time will be spent on environment impact assessment and approval, so it will take 3 to 5 months to get a business license. After getting the business license, it takes another 2 to 3 months to complete the rest step to make the company fully functional. So the growth timeline for setting up a manufacturing company is around 5 to 8 months. To set up a trading company, it takes grossly 4 to 6 months. To set up a service company and RO, it takes 2 to 4 months in growth. We can see it is much faster to set up a service company and RO than the other 2. Therefore, some investors who are not sure about the environment of the Chinese market usually prefer to set up a service company or RO first. For investors who set up service companies, if they want to involve in import and export or production, then they can expand the business scope of the company bit by bit to include trading activities and even manufacturing activities after they are sure the market is good for them to do so. For investors who set up RO, as RO is not a real company, it cannot expand its business scope as a real company. Next, we will move on to the text part of this webinar. Let's pass to my colleague, Amber.
Hello, everyone. I'm Amber from tax accounting team. So in following slides, I will quickly go through the tax system in China, including general tax categories and rates in China and tax incentives. So far, there are 18 different kinds of taxes in China, which can be divided into 3 categories according to their nature, including property and behavior taxes, goods and services taxes, and income taxes. Basically, property and behavior taxes are levied only for specific behavior. For example, stamp duty is levied when certain contracts are engaged, such as rental agreement, transportation agreement. And goods and services taxes includes value-added tax, consumption tax, etc. Basically, all enterprises who is selling goods or services are subject to value-added tax, except for certain exempted items. Income tax include corporate income tax and individual income tax, which are levied to entities and individuals respectively. In next slides, I will briefly introduce value-added tax, enterprise income tax, and individual income tax, because these taxes are essential for nearly all WOFIs who conduct business in China. A business who is engaging in sale or importation of goods, provision of services, and sales of intangible properties and immovable properties are subject to VAT. Taxes are classified as general VAT taxpayer and small-scale VAT taxpayer, depending on their annual taxable revenue. All new companies are classified as small-scale VAT taxpayer automatically, unless the company apply to become a general VAT taxpayer. The main differences between general VAT taxpayer and small-scale VAT taxpayer is the tax rate and the tax calculation method. Tax rates for general VAT taxpayer includes 0, 5%, 6%, 9%, and 13%. Basically, 0 rates is applied for export of goods or services. Domestic goods sales and importation of goods are generally subject to 13% VAT, except for some designated products. Provision of services is generally subject to 6% and 9%, depending on service type. For instance, software service is subject to 6% VAT rate, and transportation is subject to 9%. While the tax rate for small-scale VAT taxpayer is a fixed 3%, which is normally lower than general taxpayer. Another difference is the calculation for small-scale VAT taxpayer is quite simple. We use the income multiplied tax rates represent to calculate VAT. The VAT paid for purchase by small-scale taxpayer is not deductible from its sales VAT. However, for a general VAT taxpayer, the VAT paid for purchase is deductible from its sales VAT or refundable for export transactions. So companies need to make tax planning and analysis when incorporate the company to decide which type of taxpayer is more beneficial to the company. WOFIs are subject to corporate income tax on their worldwide income. The standard tax rate is 25% on taxable income, and there is no local or local income tax in China. Taxable income is calculated and paid based on accounting profit on quarterly basis, but it is to be adjusted according to the taxation rules during the annual tax clearance. A lower CIT rate is available for companies operating in certain industries, as well as for those companies which satisfy specific criteria. For example, qualified new high-tech enterprises are eligible for a reduced CIT rate of 15%. Qualified integrated circulate production enterprises are eligible for a reduced CIT rate of 15%. And small and low profit enterprises have a lowered 20% tax rate. Next, let us have a look at the individual income tax. Basically, for employment income, an employer is obliged to withhold individual income tax from an employee's salary and settle the payment with the tax authority on a monthly basis. Foreign employees are also subject to IIT in China if meeting the criteria, and the IIT liability varies according to the staying days in China. For instance, foreign individuals who reside in China for less than 183 days will be taxed only on their China source income. Foreign individuals who reside in China for 183 days or more in a tax year, but not more than six consecutive years, will be subject to tax on both their China source income and their foreign source income. Next two slides show the tax rates for salaries. The first page is applied to resident taxpayer, including local Chinese staff and foreigners who are qualified as resident taxpayer. Foreigners who stay in China for not less than 183 days in a calendar year is regarded as resident taxpayer. The category of income is subject to progressive rates from 3 to 45%. The tax bracket for resident taxpayer are calculated based on the annual taxable income bracket. However, when a company pays wages and salaries to a resident taxpayer, the IIT amount must be computed using the cumulative withholding method, with the IIT withheld on a monthly basis. Next page is applied to non-resident, which refers to foreigners who stay in China for less than 183 days in a calendar year. Compared to resident taxpayer, income for non-resident taxpayer are taxed on monthly or transaction basis, which means when a company pays wages and salaries to a non-resident taxpayer, the IIT amount must be computed using the monthly tax rate accordingly. Let's move to next slide, IIT subsidy. As you can see from previous slides, the overall tax rate in mainland China is higher than that in Hong Kong. So in order to attract more foreign talents to work in China, the government offers subsidies to qualified talent who works in GBA area to offset differences in the IIT burden between mainland China and Hong Kong. The subsidy is equal to the proportion of the individual income tax that exceeds 15% of the taxable income paid in the 9 GBA cities in a calendar year. It means the actual IIT rate after the IIT subsidy is only 15% at most, and the subsidy itself will be exempted from IIT. The qualified talent refers to the high-end and urgent needed talents. The detailed standards for overseas high-end and urgently needed talents in each city are determined by the government of each city. The policy will be for a period of 5 years from 2019 to 2023. So actually, many individuals have obtained the subsidy for 2019 successfully. So we suggest employers can evaluate the feasibility of applying for the subsidy for their employees in GBA area and seek professional advices if necessary. That's all from my side.
Thanks, Amber, for your presentation. Thanks, Savi, as well. Now I'll be talking about establishing your business in Hong Kong. And first of all, I realized I talk a little bit too much in the first part, so I'm sorry. I'll be speeding up a little bit, but rest assured that if you have any questions, please write to me, write to us, and we will answer anything within our knowledge. Basically, to invest in Hong Kong, here you have the main types of companies, and amongst them, the most popular is, a private company limited by shares, because it confers full limited liability on its members, unlike the sole propriety and the general partnership. Now, in Hong Kong, to incorporate a company, you basically need 1 week, and there are some conditions, which is having a physical director, and you can also have corporate directors, corporate shareholders, but it's important. The law demands that there's a physical director, so that transparency is assured. And as said, I think we should go ahead so I can further explain. I said 4 days. Okay, in here, this is an overload of information, but I think it's quite useful. You have an overview of everything you mainly need to invest to create a company in Hong Kong. Hong Kong is very well known as being a very low tax jurisdiction, and that's in part the region of its popularity. Company tax is 2-tiered. The first rate is 8.5 on assessable profits up to 2 million Hong Kong dollars, and everything above that is taxed at 16.5%. In the case of the sole proprietorships and partnerships, they're taxed at 7.5 and 15%. Respectively. That's basically the advantage of having a sole proprietorship or a partnership. But those vehicles these days are basically almost not used. Also, one thing that is very important about Hong Kong is that in Hong Kong, you can qualify for offshore profits tax exemption if all of your business is carried out outside of Hong Kong. Profit exemption is granted by the tax authority, the IRD, Inland Revenue Department, and the test that they determine to check whether your income comes from outside Hong Kong or not is called simply the operations test, which involves identifying the activities that are effective in generating the profits and the location where these activities occur. This is very widely used for people that invest in China, have a company in China, and have a holding Hong Kong company that pays no tax. However, this process, the people normally when they hear this, they think, okay, I don't have to pay tax at all, but which is a fallacy, because you always have to pay tax somewhere, especially in regions where, such as Hong Kong and the mainland, which are which are increasingly sharing information. There are other taxes in Hong Kong which are important, but I think we can go ahead and move on given the urgency of time. Okay, let's talk about banks. In Hong Kong, traditional banks these days are known for being quite demanding when it comes to opening a new account for companies, because of all the KYC and anti-terrorist financing rules that are imposed in banks all over the world, and it can take up to 2-3 months or never to open a bank account in Hong Kong. So these days there's the possibility of using virtual banks, which are banks that don't have physical locations, but apart from that difference, they are in everything equal to other banks. However, these banks are still very new, and very few of them exist. There are 8. The government only granted 8 virtual bank licenses, and most of them cannot offer corporate accounts. Some of them claim to, but claiming to and really offering is quite different. And if you have a company and you cannot open a corporate account, you cannot do business. So I think this is something that will be very important in the future because fintech is really Hong Kong's future, um, but it's still not a completely feasible option. There's also an alternative, which is money lenders, such as NEET and other institutions, which are different from virtual banks. They, don't grant credit, amongst other differences, but they also are able to create corporate bank accounts. These institutions take traditionally less time than traditional banks, although the timings are increasing because of the demand of the regulations. Let's move on to Macau. In Macau, I think, as I said, it's a very specific place with very specific industries, but in the end, the process is almost the same. There are several types of companies in Macau, but the main popular one for SMEs is a limited liability company by quotas, which is also has a very simple process of incorporation, but unlike Hong Kong, where it takes 1 week, in Macau, it takes 2 to 3 weeks. The process, because the articles of association need to be notarized. There's a little bit more bureaucracy there. And you may see the process here, which involves registering with the business registry or the commercial registry, notarizing the articles of association in a Macau notary or a Macau law firm. Macau law firms all have notaries. Then going to the Finance Services Bureau, which is the equivalent to the Inland Revenue Department, and then registering again with the business registry. I think we can go ahead. In Macau, also the tax is as well. Macau has a very attractive corporate tax rate, more better than Hong Kong, actually 12%. And these days, because of the pandemic, there's a big difference because now the amount that is exempt to tax is 600,000 MOP. Before it was 32,000 MOP. Now, because of the pandemic, the amount of operations the amount of revenue that is tax exempt is quite high. So you can virtually almost pay no tax in Macau. Just to give you an idea, 6,000 MOP is 62,000 euros and 75,000 USD. If you add this amount of money exempt from tax, this is shows that it's quite a good region to do business. There are, the individual income tax is also not very high, similar to Hong Kong, and other taxes have almost zero impact in the company's operations. So I think in the interest of speed, we'll be moving on. The process of compliance in Macau is also very simple. The corporate tax returns filings are very fixed. Macau has the fiscal year is equivalent to the calendar year. There are a couple of obligations that you need to fulfill, as you may see in this slide. But I think that the main focus here is also the banks. Similar to Hong Kong, Macau has virtual banks, but however, this industry is much less developed than Hong Kong. The fintech industry is almost non-existent. The Macau Development Bank and the Ant Bank, which belongs to Alibaba, are the only one present. And the law doesn't even mention virtual banks as a thing. So there's a lot of work to be done. Also because Macau is notoriously a hard place to open a bank account as a company. If you have no operations in the territory, if you have no residents in the territory working, opening a paper company or a holding company will be quite hard. So this also has an impact on the investment, residency, visas, etc. So Macau in this aspect, it's still a little bit behind. Okay, let's move on. So I think this is, to sum up things up, which region is better? And the answer is that there's no right answer. It really depends on your goals, client base, convenience of location and industry. Recently a survey presented by the World Bank reported Hong Kong as the third best place in the world to do business. And this service takes into account speed of incorporation of companies, which, as I said, is 1 week, amount of bureaucracy, which is very minimal. However, Hong Kong has also a negative side, which is, the cost of human capital, the cost of living. Everything is expensive here, and not so expensive in Macau, and even less in the mainland. In a recent article, for example, in the South China Morning Post, said that arrived to the conclusion, this article, that a 30,000 Hong Kong dollars monthly salary is a very low salary in Hong Kong, even as a single person. And these days, graduates from the university earn at best 14,800 Hong Kong dollars a month, which is also very low. From a foreign investor perspective, if you want to establish a company here and you think about the human capital, the staff that you want to hire, it's costly, and it's not so much in Macau, and even less in the mainland. In mainland China, even Shenzhen, which is the most expensive city in the mainland within the GBA, the costs are incomparably cheaper than Macau or AK, and the other neighboring cities are even better. Perhaps for some companies this is the truth. The strategy might be that you don't simply choose one over the other, but you have a combination of the two. There are many companies that have offices in Hong Kong that they have to maintain for strategic reasons, but they have some of their backup stuff in Shenzhen, or Macau, the same. They have some staff working from Zhuhai, where it's incomparably cheaper for living, for renting offices, etc. And Zhuhai also has the Hanshin free trade zone, which also grants many benefits to companies. Looking at tax rates alone is insufficient. If you look at Macau, on the surface, it appears to have the best tax rate, and it seems is the most attractive region. But as we had discussed in this presentation, there are other shortcomings that the region has. Costs are high, not as high as Hong Kong, but high enough to hurt, and its thriving industries are too narrow. As I said, hospitality, F&B, gambling. The answer basically to this question is complex, and it really depends on your objectives as an entrepreneur. So let's move on. And basically, I think we should ask ourselves not only to think about these regions individually, Macau, Hong Kong, and mainland, but also see how the GBA works as a whole. And that's the big question, because the future and the plan for the region is for greater interconnectivity at all levels. In fact, recently, the central government of China released a plan called the Outline Development Plan for the GBA, which sets out the directions and is basically a blueprint of how the region will be. And there are 7 areas of development, which is developing international innovation and technology hub, further construction of infrastructure and transportation networks between the cities. Also having an interest in ecological conservation, and etc. And for example, just to give you an example, speaking about interconnectivity on the financial services side, there was a recent initiative launched by the 3 governments, Macau, Hong Kong, and mainland, in which called Wealth Management Connect, which allows citizens from the mainland to buy financial products from Hong Kong institutions in the mainland, and vice versa. So now a company that sells financial services in Hong Kong can sell its products not only to its Hong Kong client base, but to the mainland, to Macau, without even going there, as long as they partner up. So this is a huge boost for the financial market. Also, again, there are subsidies and attractive policies to lure investors from other regions within the GBA. Hong Kong to the mainland, mainland to Hong Kong, Macau, mainland and vice versa, etc. Let's move on. About these main tenets that I mentioned in the outline plan, development an international and technology hub. Technology has been a key to the region's rapid growth, from factory of the world, which was in the past, to becoming the epicenter of tech in the past 10 years. And unlike other Bay Areas around the world, the GBA's industrial diversification will really allow it to compete in multiple sectors on a world-class level. And this plan has started for a long time ago, and will continue to grow. On the infrastructure connectivity, just to give you a more concrete example, the whole region is home to some of the most busy airports in the world. There has been a huge impact. For example, Guangzhou Airport is immensely busy. Hong Kong also, Macau less, but Shenzhen also. And again, this is also connected to the Belt and Road project. There have been huge investments in infrastructure. One example is the Hong Kong-Zhuhai-Macau bridge, the express rail link between Shenzhen, Guangzhou, Zhongshan, which have reduced travel times in the region, also making it ideal for investors. And as I said, until up to 2035 on the airport side, there's expansions for all the airports of the Greater Bay Area, all until 2035. Also on railways, there's a huge growth going on, and in terms of high-speed railways within the GBA. And the metro is still within this year, the Shenzhen Metro will connect directly to Guangzhou Metro. And every year, the lines within each city's metro are growing immensely. And finally, I think the end game to all of this, the goal, is to making sure that the Greater Bay Area develops into a global competitive environment, and most of all, that it achieves Asian integration. And when I say Asian, I don't mean Asia, the country, I mean Asian, the acronym, Association of Southeast Asian Nations. Because, the infrastructure within the GBA is growing, and the cities are, rather than competing, are collaborating with each other, each of them focusing on their industry, but also the infrastructure outside of the GBA that connects to the GBA, especially in Vietnam, Laos, Thailand, is also growing and connecting directly to the GBA. The Laos-China high-speed rail will be completed in December of this year. The Thailand to China one has been stuck for a long time, but is also building by 2025, as that's the latest report. And Vietnam also the same, around 2030, according to latest reports. And this will make it easier for other Asian nations to invest in the GBA and also make the industry within the region grow a lot. So it's not only, we tend to assume that it's mostly Western investors that invest in the region, but the future, I believe, will tell a different tale. I think this is all the time we have for today. I will be answering one of the questions that was sent to us. If you feel like you have any questions that you'd like to ask us, please write to us, and we'll answer for sure.
Hi, Guilherme. Thank you for the presentation. And we are a bit over time, so we will just take one question from the audience.
Okay, please go ahead.
Yeah, so I saw one question that says, is it possible to have a virtual office in mainland China, similar to what happens in Hong Kong?
The answer to this question is yes, and it depends on the city. Traditionally, in the past, this was not possible. The company law, the main PRC company law was very strict, and the authorities, the AMR authorities, the administrative of market regulation, were also very strict. If you wanted to have a company, you had to have a physical office, and you had to conduct your business from there. But these days, a lot of regions, such as the Shanghai Free Trade Zone, the Shenzhen Free Trade Zone, allow for virtual offices. So this, as you can imagine, has a huge impact on the fixed costs of the company. If you have to remove from your monthly budget a rent from an office that sometimes can go up to God knows how much, this is a huge advantage in saving resources. But also, sometimes I should also note that sometimes in order to open a bank account or to show that you're a credible company, a lot of banks don't like that you have a virtual office, so ask for a real one. But also, this is not a huge problem because within the GBA, especially on the mainland side, the price for an office is the price for square meter is ridiculously low. We have cases of clients that have wanted to didn't need an office because their work is on the road, their work is traveling in front of the computer, so they didn't need an office. But the authorities requested that they had one, so they rented an office in Shenzhen for 2,000 CNY a month, which is 256 euros a month, which is nothing. And the company was created, bank account was open, happy ending for everybody, and so there's a lot of options. Don't be discouraged if a virtual office is not possible at times. It really depends on the region. Okay, that's it.
Okay, thank you, Gideon, Amber, and Abby for this presentation today. And this is all the time we had. Thank you everyone for joining us. For the questions we didn't answer, we will try to address them in the follow-up email later. And we will be sending out the recording of this webinar as well, so please keep an eye on your mailbox. If you have other questions, please feel free to reach out to us. Our team is always happy to schedule a call or have a quick consultation. That's it for today. Thanks for joining, and hope to see you all again at the second session of this crash course and the other DSA events in the future. Bye.